Hello, everyone, and welcome to Market Week in Review for the week ending January 31st, 2025. My name is Bei-Chen Lin. On today's Market Week in Review, we're going to recap some of the latest central bank decisions, and we're going to talk about what investors should know when it comes to navigating market volatility and uncertainty. And stay tuned towards the end of this episode for a bit of a surprise. So first, let's start by recapping the central bank decisions. This week, we had decisions from three key central banks: the Federal Reserve, the Bank of Canada, and the European Central Bank. Broadly speaking, the decisions from each of these central banks were in line with both our expectations here at Russell Investments, as well as the broader expectations of the market. We saw the Federal Reserve maintain interest rates unchanged at this meeting, whereas the European Central Bank and the Bank of Canada both lowered interest rates by 25 basis points. Part of the reason why we see this divergence in pace, where the Federal Reserve has, generally speaking, cut rates at a more gradual pace than the ECB and the Bank of Canada, is because of the divergence in economic fundamentals between the US and non-US regions. So even though inflation, broadly speaking, has been coming down in both the US as well as non-US, what we've also been seeing is that the US economy has been relatively resilient. So for example, if you look at the fourth quarter GDP growth numbers, the US economy grew at a pace of 2.3% year over year, which is relatively robust. Earnings growth in the US is about 11% year over year in the fourth quarter for S&P 500 companies, and the unemployment rate remains relatively low. So it's a pretty robust economic backdrop. Meanwhile, if you look at non-US, it's a little bit of a different story. So in Canada, for instance, even though overall GDP has been growing, the per capita measures of GDP growth have actually been contracting in recent months. And the unemployment rate has risen by 1.7 percentage points from its 2023 low. So the unemployment rate in Canada has gone up quicker than the unemployment rate in the US. Meanwhile, in Europe, fourth quarter European GDP grew at a pace of approximately 1% on an annualized basis, so roughly half the pace of GDP growth we saw in the US. And so that's why the Federal Reserve has been cutting interest rates a little bit slower than the European Central Bank and Bank of Canada overall. And that's one of the reasons why this time the Federal Reserve actually maintained interest rates steady. Chair Powell said in his press conference that he wants to see more progress on their inflation fight before they make the next interest rate cuts. From a forward-looking perspective, we continue to think that inflation rates will likely continue to moderate in all three regions, and we think that the Federal Reserve will accordingly be able to cut interest rates twice in 2025. We expect that the U.S. economy might continue to outperform the non-U.S. economy, which is why we anticipate that the Federal Reserve might cut rates less sharply than the European Central Bank and the Bank of Canada in 2025. So continuing on the trend that we had seen in 2024. Now I want to talk about navigating market volatility and uncertainty, because as we continue throughout the rest of 2025, investors might be faced with different forms of volatility and uncertainty, whether that's with regards to tariffs. We saw more discussion this week about the potential imposition of tariffs on key U.S. trading partners, or whether it's in the economic data. Although we generally believe that inflation rates will moderate, they might not necessarily do so in a linear manner. In fact, this year, as people might know, it's actually the year of the snake. And from our perspective, I think it's a very powerful metaphor, because when we think about snakes, snakes are usually curvy, right? And so we can expect that the economic and market backdrop could see many twists and turns. 那当这些投资者面临这些不确定的环境，我们认为其实一个非常重要的事情，就是这些投资者需要保持一个冷静态度，而且这些投资者需要有办法去客观分析这些宏观经济数据和这些公司这些盈利情况，去做更好的投资的决定。就是在这个时候保持冷静是非常重要。In this type of environment, we think that staying calm, staying disciplined, taking an objective look at the data is critical for investors. Thanks for watching.
Hi, I'm Sophie Antal-Gibert, Head of Portfolio and Business Consulting at Russell Investments. If you liked what you just saw and heard, consider subscribing to our YouTube channel or check us out on LinkedIn. Thanks for tuning in.